The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 11th terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's have an extraordinary one. And you know the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. Just let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Less Show. Right now, the Dow off 104 points, trading at 24,319. S&P's down 2. NASDAQ 100 up 21. The semis are up 15. The NASDAQ Composite up 17. The tranny's back 45. So we got markets going every which way. You've got the spot volatility index up at 22.99. That's up 35 cents. It's well above the 50-day exponential moving average. It is the reason why we see these continued whipsaws intraday on a daily basis. Gold is flat. Silver's up 20 cents. Light sweet crude up 69 pennies, trade out at 51.69, leading the charger to the upside. It is Booking Holdings, 23 bucks and change. That's up about 1.25%. Broadcom is up 9, nearly 4%. Google's up 8.5, up 0.8% out there to the downside. Madison Square Garden's off 8 bucks. Ingevity Corp down about 8. BlackRock down 8. Stamps.com down about 7. So plenty to look at. Of course, I want to look at what you want to look at, and that says we're going to Germany. Jacobs wants us to take a look at two equities. He is long, or he or she, my apology, because I don't know. But let's take a look at the two equities that have been requested. Let's take a look at which one is up here first. Morgan Stanley. Let's take a look at Morgan Stanley, and the question is, where's this headed to? If we take a look at the daily time frame, we clearly in a descending price channel, making lower lows, lower highs, the whole 9 yards. The question is this thing getting back to support? The answer is it may be. Maybe. What do we mean by may be? Well, what we mean by that is if we take a look at the swing points out here, back from March of 2017 would be one, and then I would take a look at May of 2017. That's where prices traded back into around 40.06 and 40.43. Now, the volume down here, because it was tested and rejected yesterday, down here being March 27th, had about 22 million shares. The volume yesterday was 16 million shares. So what you have is you have a test and a rejection of a swing point with lighter volume. The other swing point that was tested and rejected yesterday from the trading day of May 17th, that had 23 million shares as well. So that's being retested right now. So what I can share with you at this stage is it looks like what Morgan Stanley has done is come back to a key level of support, and it has done it with lighter volume. That doesn't mean that it can't push on lower or can't push through it. But if you're short, which you are, I would start to tighten that stop out here. Now, do we have any other sign of some type of bottom? The answer is we don't today yet at 111. If Morgan Stanley were to turn around, though, then we could perhaps, or maybe it's tomorrow, or maybe it's the next day, or maybe it's not at all. What we can see out here is price has been pushing lower, doing less relative energy, and if the cavalry shows up, if you see some type of bullish reversal signal, and then combine that with closing over Stevie's red line, currently priced at 42.34, you would not want to be short the equity, assuming you were using a daily time frame to go ahead and make that decision. If we were looking at daily time frame charts, by the way, both on the first, which is the screen that's up right now, as well as the white background chart out here. With regard to the weekly time frame, what do we have on the weekly time frame out here? Is there anything? Well, you know, you can see on the weekly time frame, this shows you how this is moving into a sign of strength. The real sign of strength on Morgan Stanley took place the week of November 7, 2016. There you had a wide-ranging bar, and you had price pushing higher. There was 108 million shares. As an example, last week, which was a bad week, came down with 67 million shares. So pushing lower into a level of support. Morgan Stanley is trying to and should, at some point in time here in the near future, find a L bottom. Yes, a bottom. That's what we say. Johnson & Johnson is the other equity to take a look at. Now, in the case of Johnson & Johnson, this is just consolidating on a daily between a range of 144 to 147. On a weekly, everything looks bullish as long as price stays above 143.79. If we take a look at the monthly, we have, what, about 10, 11, 12, 13, 14 trading sessions left in the month. So far, what you'll be watching for here, you're long, is you'd like to see price, in the case of Johnson & Johnson, close over the January high out here. Now, that high, by the way, that was priced at 148.32. The candle session there on a monthly time frame for Johnson & Johnson, that was your shooting star. And it did have follow through. And what we can see is price followed through all the way down to support, which was the bottom of its monthly profile. That found support in about the 119 area. Now, there's a new profile. There's a new sheriff in town, and price is above that. So that's bullish. So that says the next level of resistance is going to be those January highs, a close above. Now, it was tested last month. Last month, the month of November, had volume of 152 million shares going against 170. So volume's really not too bad. However, this month, volume is El Stinko. Only about 49 million shares here right now. So what Johnson & Johnson is doing, there's nothing bearish, but it doesn't seem to have the momentum to go ahead and take out resistance, which would be 148.32. So be very positive to close above the shooting star high at 148.32 on a monthly basis come the end of December out there. So I hope that helps you out, and welcome to the Tiger's Den, all the way from Germany. All right, so what do you want to look at next? Well, Ruby's got a request to go take a look at the Russell 2000. Let's 2000 equity futures contract on a daily time frame chart out here. So let's see. In the case of the Russell, what's your question? Is the Russell 2000 going to test its bottom again? Always a possibility. If we take a look at the Russell 2000 out here, we'll have to do that when we get back from the break. Ruby, the answer to your question is lying in Stevie's chart out here. And it's that hammer candle from 3 days ago. So far today is just another test of that level. Actually looks like the Russell 2000 is bottoming. Yes, indeedy do it does. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we were taking a look at the Russell 2000 just as we were going into that last break, and the question was, will it go test the lows of yesterday? So there's a couple things that we can take a look at when we look at the equity futures contract. The one place that I had suggested that we pay attention to and focus on was the hammer candle that was formed on December the 6th. Now, a hammer candle should mean that the market is trying to hammer out a bottom. Now, my experience is those hammer candles work best when they are associated with a pattern. So was there a pattern going on when that hammer candle formed out there? And the answer was yes, most certainly. Stevie's Rhodes momentum indicator bottom signal that was out there. We pay attention to it. You might ask yourself, why do we pay attention to it? I mean, I would ask that question. Why do we pay attention to it? Because it works so well. Does it work every time? Heavens to Betsy, no. But does it work a majority of the time? The answer is yes. Here's an example. If you take a look at the gold contract out here and you look at those red arrows on the bottom, you can see that gold has made its significant bottoms when it forms that pattern. The most recent one was in August of this year. Gold hasn't done a ton, but what it has done is it stopped moving lower. In other words, that low or that bottom in August so far is the bottom, the August 2017 low inside of the gold contract. Now, that was a continuous contract that we took a look at. That just makes it easier for you to take a look at all those other instances where Stevie's pattern forms. So we know that we've got that inside the Russell 2000 when that hammer candle formed. 2 days ago was a test and a rejection of that hammer low out there. Yesterday was a test and rejection because it's a daily chart. That means we have to look at the end of the day close out here to see if, in fact, that level of support held. In the case of what the Russell 2000 has done so far today, this morning / this afternoon, it has tested that low, which is 1440.70. Now, what I shared with Ruby during the breakout here was if you do see a close today below 1440.70, you have a close below the low of a hammer candle, then I'd have to say, yeah, those lows would be tested. But at this stage, we know that it is significant support, that by the end of the trading session, buyers are able to go ahead and, for whatever reason it is, they're able to push price right back up above that key level of support. Now, if you and I were to go take a look at the 30-minute time frame chart just to try to, for blanks and giggles, you fill in the blanks out there, what we would also notice is that we saw one of those 30-minute Rhodes momentum indicator top signals out here. And where price fell back to, which it did during the past hour and a half, it fell right back to the place where you would have targeted, where the Russell 2000 would pull back to on this time frame, as long as you keep your head in this chart on this time frame. And that is that red dashed line. That red dashed line is the Tom DeMark setup trend line established by the Tom DeMark setup 9 count. Now, that's a mouthful, but that's the truth out there. And so what we can see, Ruby, is a key level of support, key, on a 30-minute time frame, which is really, in essence, matching the bottom of that hammer candle, is all lining up with each other. So if you're going to ask me, is it going to go retest those lows, my answer to you right now at 1:21 in the afternoon is no. It's not. And I will change that mind, although I won't be here with you, if you see it close at the end of the day below that low out there. So I hope that helps you out trying to stitch things together. By the way, speaking of not being able to be with you, I will be doing my civic duty tomorrow and hanging somebody. No, I'm just kidding. And going to jury duty. So unless when I call this evening and they say, we don't need you, we've done our research on you, we've seen you live on TFNN, and we don't want you to come in, which I doubt is the case. I likely won't be with you, and I can only show up at 8, and maybe they release you by noon or something, and I can just skedaddle back to the house. But at this stage of the game, I'll assume that I'll just be back with you on Thursday, and certainly we'll keep you posted out there. So just doing my civic duty. All right, see if there's any other questions. No more questions inside of the den. Let's see if we've got any fingers do the walking questions out there. We don't. So let's just keep. Let me just make sure here. Let's just keep searching around. No other messages. What else should we take a look at that would be useful to you? Yeah, the Dow. I'll get it out. Don't worry about it. Let's take a look at the Dow. Speaking of hammers, let's go take a look at yesterday's hammer in the Dow. Now, you'll see that the Dow, it didn't have, by the way, it did not have that Rhodes momentum indicator bottom signal when yesterday's low formed. But what it was doing, it was testing the prior Rhodes momentum indicator bottom. And price closed above that, and support is held. Now, when taking a look at this chart out here, if I were to ask you where is resistance, what would you say? Yes. What you would say is, well, that's simple, Stevie. It's called Stevie's red line. It's priced at 24,753. So bulls or bears, we know that that is where the bears are lined up. How did Stevie's red line know that that's where there was going to be a Pelosi, Schumer, Trump temper tantrum out there? Fire them all, really. These politicians, let's just don't force me to go down that path out there. Just good Lord, I just want to blow my brains out when you get a group of career politicians together. Really? Good Lord. I said, hey, don't take me down that path. I would run for office as long as it's a 2-year term. 2 or 3. It has to be a term limit. That's it. Term limit. That's the deal out there. You get in if you decide that you want to do well for the country, which you should, or you do your civic duty, whatever it might be. You get in there, you do your job, and you're gone. You're out of there. You just got to do it. In any event out here, for the Dow equity futures contract, and I suppose we could give you the Dow too. We can put that on another screen out here because I'm sure that the Dow Jones Cash Index was doing the same thing. And some of you are saying, well, you know, Steve, I don't have the equity futures contract. Here's the Dow. So let's just come take a look at the Dow out here. But I'll give you both, 24,754, and it would be 24,750 is the number inside of the Dow. So it is a key level. Now, no hammer candle, by the way, inside the Dow. Now, you know, and I know, that's from Dave Mason tune out there. That the equity futures contract, the reason why, I mean, it's price discovery. It's traded nearly around the clock, not totally around the clock, but close enough around the clock where we really want to utilize its signals to help us understand what the market is doing. So we also know that not only is Russell 2000 trying to hammer out a bottom, but so too is the Dow. The signal that it will have hammered out that bottom is a close above Stevie's red line. It's not there just yet, but that's what you would want to be watching. Things can change. How fast? That's correct. In a heartbeat, in the snap of your fingers out there. I mean, at 1:26 in the afternoon, I could be giving you one piece of advice, and then at 1:50, it could be a whole totally different piece of advice out there. The question was about the VIX. I think that was a question Ruby put in there. So maybe it was, hey, what should we go take a look at? And so I'm going to go down that path here, see if how intuitive I am. And if we just take a look at the VIX, and we take a look at how it's trading, 2286, still above every single futures contract. Mind-boggling, just simply mind-boggling. It's because it's backwards. They call that backwardation. It's just not that normal for this long a period of time. Steve Rhodes, TFNN. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So just to finish off the spot volatility index, you can see it's trading at 2291. If you're looking at the chart on the bottom of the screen, the 50-day exponential moving average is that blue line at 1911. Basically, whenever price is trading above that 50-day, it's where you've got a lot of potential volatility. I don't need to tell you that. We've had a lot of volatility for the most part ever since the October 4th standpoint out here. That's when the spot VIX index finally moved above the 50-day exponential moving average with some conviction out there. We've only had 4 days, four and a half days since then, since October 4th, November, December, so 2.5 months where the spot volatility index was below that level. So you can really use that as a nice gauge out here. And the other thing is, if you look at the top line, you see the spot VIX price at $23.01 right now. It'll continue to change as it gets updated, but you can see how it's well above the December, January, February, March, April, May, June, July, August 2019 futures contracts out there. So when the bottom does get put in here, and that's really what it's telling you, is that it's just little short-term volatility stuff. How long is it going to last? I don't know. I'll have to do some extra homework on this one to try to assess that and figure that out. So that's all that I've got to say for you or share with you with regard to the spot volatility index. I don't know. What else do you want to look at? There's no questions out there, so it's very quiet out there in Tigerland or Tigress land out there. So not necessarily a good thing. What's gold doing? It's back $2. If somebody was asking that question, what does that mean? It means it's back $2. If we go take a look at what gold is doing, it's trying to form a new profile out here. Prices pulled back to the top of the weekly. That's at 1245.80. The low today is 1245.80. It's trading at 1247 right now. So the top of that box is 1256.60. It's not a solid box. It's trying to form. It may go away by the end of the day, but that's resistance as we speak right now. Gold, expressed in euros, is actually trading higher. So gold is up. So even if it's pulling back in dollars, even if there were sellers in dollars, they're buyers in euros. If we take a look at gold in yen, it's trading slightly lower, made a higher high today. We didn't see that in dollars. It is where it's at the 100% move of a move area. So it says kind of iffy, but nothing big here from a seller standpoint. And gold priced in pounds. Now, of course, this makes sense because of all the Brexit, Schmexit stuff out there. Are they really going to turn back the will of the people and not do a Brexit? Is that because that's what politicians do? You got to throw them out. I mean, really, that's how we've all got to get together here. Both sides of the aisle, throw them all out. We change them out all the time. Just imagine if we had that one little tweak and we all agreed to do that, how that would change things, quite frankly, for the better. Of course, that's just Steve-O's take. But with regard to gold priced in pounds, because that's really the take you want, you are at the 100% move. Does not mean that price has to stop here, but it is up against a resistance level out here. There's no signs yet that it's that the sellers are going to show up here. In fact, what you would want to see if you're long gold, we showed you the longer-term gold bottoming signal, then you'd want to see price take this level out. That's what you would want to see. So that's what's going on in gold. S&P wants to take a look at Roku. Do you use a Roku S&P? Or do you use, of course, Roku is what? Just a device? It just shows you how technically savvy I am, right? Just a device to use like a Apple TV or something like that. So you use Netflix, but what is Roku? What is Roku though? Is Roku like a Netflix and it's a movie thing, or is it the device? I don't know. I just asked because actually I don't know. Probably the person I should ask is Polar Bear. He would set me straight. But if you're asking what Roku is doing, man, it does not look good. That does not look good out there. And what do you watch on Netflix? I actually haven't watched Netflix. I did just kind of this past weekend got some things. I don't really have a lot of time to watch, sit down and watch a series. It's like the last thing on my list. And because watching football, for example, or sports or hockey, now that would be on the top of my list versus watching some, but I'm not taking anything away. I'm just telling you where if I've got some free time or some background information, while I'm reading a book, I'd rather have a football game or even a basketball game on in the background. But that's neither here nor there. I'm getting way off base here. It's a provider. Okay, thank you, Tim. And so that's good to know. Well, as a provider, they're not doing very well at providing. That's what I can tell you. I don't know how their service is, but Roku, as a provider of wealth to its shareholders out here, they're kind of doing the old stinko, right? Here is a weekly time frame chart. If it's going to find support, maybe it's going to be at that 100% move of a move level, which takes you back into that swing point from the trading month of, not weekly, April 2nd, 2018. Now, price has not gotten down there. $33.05 to $29 would be the price range out there. Volume there was light. 15 million shares. You're already at 16 this week. It's not down there, but it's picking up steam as it moves into that level. Now, we can also see that where the majority of shares traded hands is where it's, in essence, trading into. That was between the week of November 6th and November 13th, 2017 out here. So it's trading into that area. If we go take a look at Roku on the daily time frame, what you're going to look at here, the monthly doesn't have enough information to build a set of profiles out here. But if we do take a look at the Roku on a daily basis, and to the extent S&P that you want to go ahead and trade this, we can see how it's stretched, most certainly stretched out here. It's a dangerous looking stock. Since it made its highs back on the trading session, this is the daily time frame on the trading session of October 2nd. It's only been above Stevie's red line for 1, 2, 3, 4, 5, 6 days. Well, I take that back. Back here in November was up for 1, 2, 3, 4, 5, 6 days again. Huh. Here's the deal. If you see a bottom, I'm going with by 6 days, you better be out of this thing. 2 6s in a row. If you got 3 6s in a row, this would be a very devilish kind of connotation to it. But as we speak right now, I have to say Roku is trying to form a bottom because it's stretched to the downside, but it may in fact stretch itself even further and get back all the way into that weekly time frame that you and I just looked at, which was between about 29 buckaroonies to 33.05. So I hope that helps you out. So thank you. Roku is the simplest way to stream entertainment to your TV on your terms. Access more than 500,000 plus movies and TV episodes across free and paid. Tim, you must be a marketer to write that. That's well written out there. Almost sounds like I was giving you a commercial out there. But lots of people hack the device. Okay, well, maybe not so good out there. In any event, okay, there was a question if we could take a look at Disney. Could we take a look for a long entry into Disney, DIS? And we can. So when we get back from this break, let's go take a look at Disney out here. Let's try to figure out what it is doing, see if it's trying to find a bottom or if it has lower to go, like around 107.81 as an example. Steve Rhodes with TFNN. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're taking a look at Disney out here, and on a monthly time frame, just taking a look at the longer term picture out here. In essence, you can see this thing is really trading sideways. And the range on this, because the question is, where's a decent entry price? So the range on this is around the 121 level, the bottom of the range around 90 or so. I'm not saying it's going to get back to 90. Right now, what it's doing, it's trading above its monthly top of that market profile. And it has been doing that since July of 2018. And that, in essence, is long-term support, or we'll call long-term support number one. If price were to close below that level, then you would be looking at 98.19 to 102 as the price point. But right now, 110 and a little bit of change is a level of support when we take a look at the monthly time frame. When we look at the weekly time frame out here, it is pushing this week into the September 17th swing point. Now, that swing point on September 17th had volume of 49 million shares. And this week, you're pushing down. Now, granted, it's only Tuesday, so it's 11 million shares. But if you're looking for an entry, watch the volume the rest of this week as Disney pushes into that swing point. If, in fact, it closes above 111.98, you're at 111.70, and it does with lighter volume, then you would have a rejection of that swing point. And then it's possible that the low this week was an entry point. A more ideal, can I say more ideal? Probably not, but a better entry point when we look at the weekly time frame would be the low of September 17th, would be 108.23 to 107.81, the bottom of its profile out there. That's what the weekly says. Now, what I dislike about the Disney chart is what it did today. And what it did today was it tested and rejected Stevie's red line. Now, the reason why I dislike that is because Stevie's green line turned red on December 6th. And oftentimes, the phenomena that is associated with that is that what you will see in the ensuing days, not one or two, we don't know how many days, but in the ensuing days, you will see price and Stevie's red line catch up to each other. And that's what Disney did today. 113.70 is the number. Now, look, it doesn't have to hit it right to the tick, right to the penny. Sometimes it does. Sometimes it. But use it as the principle for what you're looking for to generate the next message for you. Now, in the case of Disney, the next message then, as long as price trades below Stevie's red line, is that it wants lower price out there. So if you're looking for an entry price inside of Disney, we've given you a couple. I don't know what your time period is, but certainly 110.13 would be one of them. 107.81 would be another one, and the 108 and change, whatever that was the kind of like the third one out there. That would be the range I would be looking at for Walt Disney World out there. So I hope that helps you out. Scott L writes in and asks if we could take a look at the euro US dollar. What do you think it's looking to do? Working at breaking a hammer on a monthly basis. So on a monthly basis, let's go take a look at the euro US dollar out here. Let's put up the monthly time frame chart. See what we can see out here. And what are we looking at, Scott? Are you using... The question becomes, is this the candle you're looking at here? Is August the 1st, which maybe it is, and will give, it almost looks like the wick on that candle, Scott, maybe it's just maybe a bit too much out there, but let's give it the benefit of the doubt, and let's call that a hammer candle. And what Scott is looking at is the low of 1.13010, and he's looking at a monthly chart, which means we still have till two plus weeks out there to determine whether or not it's going to find support. But it may be at support. Let's use a shorter time frame out here when asking what is the euro likely doing out here. And for that, let's take a look. Let's pull this over here so I can make it a little bit clearer for you as to what Stevie thinks it's doing. Oh, you know what we should do? We should add Stevie's red line to it, shouldn't we? So let me do that. That'll take just a moment for me to add that to the chart here. Where is it? There it is. Let's change this to weekly, and then we'll get that feel, because we want to see where it's trading in relationship to that. So we can see how Stevie's red line has acted as resistance on a weekly basis. Now, there's a couple different patterns out here. It's very possible. So what we have seen is a couple of weeks ago where price made a time to mark setup 9 count out here, and oftentimes after the 9 count, what you will see is one of three things: a hiccup, a sideways move. A hiccup is, you hiccup and then boom, you're on your way, right? The hiccups are gone. You continue on with that trend. Sideways-ish move, which is what we've seen for the past couple of weeks out here, or you simply see a change in trend. We don't see a change in trend, not yet, at least when we take a look at the weekly time frame chart. If I were going to target with price trading below Stevie's red line, since we've got a falling price oscillator below zero on a weekly time frame, my target for where price is going to go to, because you were looking at, hey, is price going to break that monthly hammer candle, or what looks like it could be a hammer candle, then my target would be the June 23rd, 2017 area. That's where you see that Tom the Mark setup trend line. That's the last time there was a 9 count to the upside, and that takes you to a price area of, come on, work with me. Come on, we're on live TV. Well, sort of live, sort of TV. 1.119 looks to me like that is the downside target inside of the euro. Likewise, the upside target would be the dash green setup line, because we just talked about how the week of November 30th, that created a ton mark setup 9 count to the downside. So the upside target, if you're looking for that, if you're looking, hey, does that hammer candle hold? Instead of doing the sideways move, do we start to move higher? Then I would be looking for the resistance level to be that area. That, again, is I haven't given it to you yet, but that's the October 5th, 2018 high. Let me see if I can get this computer to work with me. Come on, work with me. Punch it up. That's the level 1.1627 out there. So when I take a look at the euro, US dollar, that is what I see. So I hope that helps you out, Scott. Thanks so much for writing in. Let's go out to Philadelphia and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Hey, Steve, thanks for taking the call. Before the show ends, I wanted to ask if you could help me with the DES futures contract on the S&P. And my question for you, Steve, is this. the decline that occurred from Monday, December 3rd, when we had that gap up in reaction to a trade deal coming out of Buenos Aires, we had a decline of 28.14 to yesterday's low at 25.83. My question is the bounce that has occurred since, is that conceivably the entirety of a correction with a C to D leg heading lower to take out lows right now? And if you can see that case, could you do your chart work where you do those nice A, B, C, D or 1, 2, 7, 2 projection targets on that formation, please?
Absolutely. We're going to go to a break. Are you going to hang on, or?
Yes, I sure will. Thank you.
Okay, absolutely. So we're going to go take a look at the ES mini. We'll take a look at some A to B equals CD targets. But I would tell John, if you were to ask me tomorrow, maybe about 10 o'clock in the morning, because of the next apogee lunar phase at 7:26 a.m., I'd have a better idea. But we'll be right back.
I like it. Thank you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
On the line with John in Philly. We're going to answer the question. Is it possible that today's rally to the upside was the extent of the rally and price would continue lower, and if so, where to? And the answer is it is very possible because we saw price get up to Stevie's red line. Now, this is different than Disney's red line because that Disney red line was taking place shortly after the oscillator and change line, that's really what Stevie's red line is, turned from green to red. This has been red for quite a while. It means our price oscillator is below zero. Nothing more bearish than a falling price oscillator below zero. However, nothing more bullish than a bullish hammer candle occurring at a pattern. In this case, there's multiple patterns. Price moving lower, doing less relative energy yesterday, getting down to wave count number 7 in our case, letter G. So here's the clash between the bulls and the bears. The patterns that I see out here, John, are two from the downside action, or let's say one from the downside action, one that is sideways right now, and that is the consolidation. I see a clear consolidating pattern inside the ES mini from the October 16th, October 17th high down to the low on October 29th. That was what was tested yesterday. We saw that that was a hammer candle. That's the second one in the last 4 days. Tells us the ES mini or buyers are trying to hammer out a bottom. We'll find out whether or not they can. If we get a close now below this consolidation area, below yesterday's hammer candle, we would then have a measured move equal to that, equal to or greater. Well, now if we put that together with the only A to B equals CD pattern that I believe exists out here, and that's coming off of the high from October 3rd, down to the low on October 29th, to the bounce up into the high on November 8th, the 1-to-1 level takes you to 2476. But the 1 to 1.272, which is one of the things you talked about or asked about, would be the equivalent of that measured move of that consolidation break. And that price point would be 23.83. So it's going to be all about, I'd say, yesterday's low at this stage here. If we see a close below that, then I think that then says, yes, you could see that move to those two levels. Does that help you out?
Steve, thanks for sharing the data. I do appreciate it, sir.
My pleasure. Thanks so much. Folks, again, I probably won't be here tomorrow as I do my civic duty, jury trial. And hopefully I'll be back with you on Thursday. So have a terrific Tuesday. Stay tuned for David White, Tom O'Brien from 3 to 5. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.